All right. Let me change the design here because that looks kind of weird, and Kelly doesn't want to be front and center all the time, I would imagine. All right, well, let's do it that way. Okay, so good morning, everyone. While Gracie and Angela are getting some bagels out there, I guess everybody's going to show up a little bit later. I'm not sure what's going on here. Usually there's 10 or 15 by this point. It happens sometimes. Well, thank you all for joining us virtually if you're not here in person, but thank you for popping in. Kevin Russell is with Petra Home Lending, and he might look a little bit familiar because his brother is Sean Russell from First United Bank.
And I'm like, oh.
Yeah, and Gracie's like, yeah, he kind of does look like him. Kevin, if you'll come on in, and we have people online too, so we'll let you kind of, I'll give you the short, skinny. I was doing a deal with Sean, and he wasn't able to do it because of some things that his company couldn't do. So he referred him to his brother, and we got it done in what, 3 weeks?
Just shy of 3 weeks, or just over 3 weeks. So yeah, it was an interesting introduction on the loan because it was a fairly new type of loan. It's called an ATR loan, and all that basically means is ability to repay. There's a client that didn't have a job,
but had severance,
but had plenty of post-closing assets and a big down payment. So buying as a primary residence, so that helped. So there are a lot of different types of loans that are out there that the industry, as we've separated ourselves from the mortgage crash of 2008-9. Some of those products, they used to be referred to as subprime loans, but now it falls under a category called non-QM. And all that really means is it's a loan that doesn't conform to your agency type loans. So your Fannie Mae, Freddie Mac, agency, government loans. It's basically a loan that a bank would take like a shelf loan. And the shelf loan just kind of says that, hey, you meet all of the right ingredients for us to lend you money. And so those are definitely products we have. We have bank statement programs as well. The bank statement programs can be more difficult. I know I've been hearing a lot of people in my chair advertise for those, but what they usually don't tell you is the majority of those don't close under that particular program. And it's a multitude of reasons why. But a lot of times people will think, well, instead of if a client is having a conversation with a realtor, they're asking the realtor, well, hey, I'm either self-employed or I don't report any income, so can we use bank statement programs? The answer is yes. I just encourage you to try not to answer a whole lot of questions that they're probably about to ask you on those, and refer them to a lender that knows how to do those. Because most of the time, if they're talking about high LTV or low down payment and a bank statement program, those are two words that don't collide in the same sentence. So that is definitely designed for a client, kind of like the ATR loan. That's a client that again, great credit, lots of assets, just don't have a job. But I can easily put down whatever I need to get a house. That's the kind of, if that's where the conversation is, that's kind of where, we can coach them into what that lending would look like on paper. So from a financial side. But like my brothers, we both have a lot of similar products. Sean works for a great bank. The company I work for is entirely different. So we're more of a broker. He's truly a bank. So they lend money in a similar way that we do. And then in his, like for instance, building construction, that's not in our wheelhouse. That's nothing we do. He is excellent at that. His bank has some excellent products under that category.
This is not a commercial for him. This is for you.
Sure. I only say that because he's good at what he does. And then there's products I have that, so it's a love relationship.
Horrible at it. Never use.
They just don't have it on the shelf. So that's usually where I'll say, okay, well, and so when Sean, kind of like we were just talking about coaching and conversation, Discovery discovers, I don't have anything for that, but I know somebody that does. And so that's usually where the referral comes in. And I like before, a lot of times people will just go to a website and apply. I don't recommend that, not with us, because I like to have a conversation with you first. Let me understand what you what you're trying to achieve, and let me work backwards. For one, to tell you, yes, I have something for you, and two, sometimes people will just start uploading a multitude of things into a file, and I don't need any of it because of either what they're specifically doing or the specific things that they have about their deal. So we are where I'm completely different than Sean, and I would say most of the people in our business. We are a small company, but we have a huge impact. We lend all of our own money, but we sell to 12 different investors. So Sean's bank, and like Wells Fargo or Bank of America, they got one product. And so where I have a specific deal like that ATR loan, I know if I've got two investors that'll buy that loan. So if I kind of start to turn sideways with it, because if something was either over disclosed or I needed to repackage it in a different way, I have an ability to then send it somewhere else. That's a humongous advantage. And I could even say that about a full doc loan. So the hard part with the big banks is once they submit it, there is no unringing that bell. It's been sent, and you've got to go by whatever's already been provided. So when you've got a multitude of investors based on the client's needs and wants, that I would say gives me a pretty big separation of what they offer. Another unique thing about Petra, we do for conventional financing, we control our own appraisal panel. So I find that a huge advantage in what we do, because in conventional financing, sometimes there could be something issue with the property or something that we're trying to just head off of. Could we find an appraiser who might be a little more sympathetic towards that area because they know that zip code better than just a general panel? And so government loans, VA, FHA, I don't have that ability, neither does anybody else. It is ordered by a third-party company, but conventional financing, I have the ability to control that. So if there's something about, hey, Kevin, this particular home comps are going to be a little difficult. Is there somebody that you think would be best sourced, or can I potentially locate an appraiser that I think that would be usable for this area? A lot of times I can add them to my panel. That is a huge deal that I happen to know nobody else is doing. So, and if they are, I'll be very curious, because that's adding somebody to a panel is not an easy process.
So only you can do that. So.
Correct. But you tell me, hey, I found an ABC appraiser. He's in this area. He's licensed. He may not be on your panel. So I just need to get their contact information and get some sourced info, and then I can make them part of the rotation. So to which then I can potentially get them sourced to do that deal. I don't know of anybody else in the industry, and I've got a lot of friends that do this, that they know that's a unique situation. So
that's pretty big.
That is big.
it is. And the other part that makes that big is in our industry, so you can understand the optics of sometimes what makes it a difficulty on this topic is when a loan officer gets an appraisal, it's given to him, his underwriting operations, and a lot of times the client all simultaneously. So if there was something that, hey, it didn't hit value, or maybe something was missed, or hey, again, once you send it operationally and underwriting has the ability to review it, sometimes, and then it didn't hit value, but now I'm trying to say, okay, well, hey, I'm going to open another appraisal, see if I can get them to review that. And can you kind of ignore that? Good luck on that, because it's the human component. They already said they saw 250, the house is under 260, and there's a $10,000 gap. You have a client putting minimal down, and it's like, how do I get the underwriter to not look at that initial one? Well, conventional financing, I can call the agent and say, hey, you want to review this appraisal? Do you think this appraiser missed anything? Or do you think that that's a solid value? Because once I send this, it clearly is going to probably hijack our deal. And so it's giving you the ability to look at it, review it, maybe even with the other agent involved, and say, God, this guy missed this, and this. Square footage is wrong. There's this other comp maybe we could have him consider. So I still have all that captured information before it actually goes to an underwriter. So that's another huge component, because most people in this business, again, it's delivered to the client, the loan officer, and underwriting all the time. So it's like, oh man, I can't get that off now. And so now I basically have to prove that that appraisal was garbage in order for them to throw that one out to then review another one.
Even if you did asked to do a reconsideration of value, like the underwriter.
They will, but it's tough to get them to
Yeah.
budge off that. It really is, because again, it's the human component. Well, they already saw it 250. What was the huge change of circumstance where they just found 10 grand or 20 grand? Was it a comp? Was it
Yeah,
the square
I've
footage
usually,
wrong?
the only successful times I've been able to do it is when they've totally missed a comp. Like they went 2 miles out and they missed the comp that was.
Sure.
you
Or
know,
was it an older comp?
Like,
Yeah,
Yeah.
it was, hey, we're looking at an 8-month-old comp, and there's another one that's 2 months old or 6 days old.
Yeah.
And so that usually, that gives the ability for them to refresh the screen and
Yeah.
say, hey, I can't kick that one out. And now, but he then has to send a rebuttal. So he then also has to explain to the underwriter why the initial one I sent is debunked and garbage, but here, please review this one. So in conventional financing, what I'd rather do is not send that one. Let's figure all that out before it goes to underwriting. Because I'd rather send the one that supports value, because he took your advice or he took some information and he could then find 10 more grand to support value. So that is a huge component, because again, a lot of times you can get the value changed, but if they don't like the rebuttal, or in Fannie and Freddie, all government loans, there's a system that scrubs all appraisals. And if it gives it a rating. So if it has a high rating, that basically looks like to the investor, this is a reach for value. And so like a 5, you better know they're going to pick that thing apart like crazy.
Right.
And so we know that, because as part of the scoring of processing operations, when we're sent in, when we see these, typically the appraiser or the processor is alerting someone like me saying, hey, that thing just rated a 5. You just prepare yourself. So, and sometimes we get them through still. But it's, usually what that means is your gross adjustments are just way too high. And the appraiser may have just been sloppy, but they also may be spot on. I mean, there was nothing else to support that,
Right.
And yes, it does cost $20,000 to add that kind of square footage. That's why that gross adjustment between comp 2 and comp 4 were different. So a lot of it depends on the legs of the appraiser. So if they're in a situation where they're having to rebut something, they better be good at what they do. And a lot of appraisers, once they hit send, they don't want to touch that thing ever again. I mean,
And they don't like
They
that
they
challenge.
don't even talk about it.
they don't. They, as far as they're concerned, what they were paid and compensated for is literally once they hit send, they don't ever want to talk about that one again. And I get that. I mean, because now I send back a rebuttal, and they got to mess with this thing, and they don't want to mess with
They
it.
don't mess with it.
So either way, but we're like I said, small company. There's only 8 of us. 2 of them are operations. The rest of them are all in sales, like myself. So we cover the whole state of Texas. But any of your agency products, that's definitely where I would say the majority of in agency, meaning your Fannie and Freddie products, that's the majority of what we sell. VA do a whole lot of those. VA, we've just closed a 1.9 million, 100% VA in South Lake. Pretty proud. That was the biggest loan I ever did under VA Jumbo.
Yeah.
That one actually just closed a couple weeks ago. So we're VA, I think, will lend in certain investors will lend up to $2 million up to 100%. Certain investors
But
will,
in general.
yeah, well, and some lenders, like for instance, Sierra Pacific, that's an investor we sell to, they cap them at 1.5. So, but we've even had some ratio crazy things with VA that's come out recently. We've had some extremely high debt to income ratios that no other loan will cover. A lot of it has to do with the specificness of the client. This reason when we closed, it was a ratio that I ended up sharing the snap screen to other people in my industry going, have you ever seen something like this? In which their answer was, there's no way that's closing. I was like, it just closed.
Wow.
So, and what it was is just perfect, great credit, 30 years of the same house, just sold it, wanted to buy another one, but 30% down on a VA loan out in East Texas. And, plenty of post-closing assets, but it approved a debt to income ratio that I've never seen in the 26 years I've done this, ever. So, so it is, it's pretty interesting when you see the different things that sometimes a loan will spark or bring. You definitely want to stand taller on those and say, hey, this isn't my every type of loan. Somehow this one came through, and that's great. So, but You know, a lot of times when I'm partnering with the clients and the realtors and whatnot, I'm very transparent with you guys on what to brace yourself for. So when a client applies, keep in mind the conversation with the loan officer is always going to be different than the one that they have with you guys.
Mhm.
They give you cliff notes of kind of their scenario. It's up to me to figure out in discovery where the holes are in their story.
Sure.
And there always is. Doesn't matter if it's a full lock loan or an ATR loan. So, you know, clearly I'm limited of what I can tell you, but usually I'll tell you, hey, this one's going to take a lot of love to get there. That's to be interpreted as either credit, assets, you know, something scenario with income. And those are usually the reasons of why I try to just let you know, hey, this is not just a walk to closing deal. This is, you know, and I will always disclose to you, this one should have no issue. Just go find this guy a house. But if it's the client, the first time home buyer, or we've had some rough issues with credit or assets are just all over the board. In a very nice way, I'll find a way to tell you, hey, we kind of want to prepare ourselves. This one, I feel very good that we'll get it done. It's going to take some work though. If it's credit related, that's the big thing is, hey, don't go show this guy any more homes.
That's good.
This is definitely something I would wait and make sure that client understands, because I know clients approach you guys all differently, especially under this topic. Well, I want to apply, but can you just go show me this house and this other one and kind of take up your whole Saturday and not really ready to apply with Kevin or Sean or name your bank, but we should be good there. I'm sure you guys will all figure out that's a big beware.
It is.
Humongous red flag. So
I just want to say he did a great job with my client. It was a tricky loan, and I knew it was going to be tricky. And so Kevin did a fantastic job. Thank you for breakfast, by the way.
Yes,
thank you for joining us today.
Thank you very much.
And where's your office in Dallas?
We're in Dallas,
Okay.
yeah. So, but I can, if there's ever a need for me to come out because the client wants in person, great. I do a lot of Zooms with clients or just face to face with my phone.
Okay.
So just whatever their needs are, happy to help.
I'll put all of Kevin's stuff in Slack, put his information in there so you've got a copy of it. And you've already I've sent the link out a couple of times for Petra Home Lending, but I'll put his specific information in the Slack. Kevin, thank you very much, sir.
Absolutely. Okay.
Great to have you.
You guys enjoy your day.
Thank you very much.
All right. Thank you.
Give me 5 seconds. Let me say, hey, Marco. Hey, thank you, man. Give me 2 minutes to make announcements and you're up. Okay. So, couple announcements I want to get real quick. At 11 o'clock, we're having a CE, 1 hour CE with Jeremy Dean of Elite Title. It's fully paperless closing. So that's one of the things that Elite Title is doing. That starts at 11 here in this room. Okay. Your dues are due. If you haven't paid your dues, now is the time to go pay the dues because they're due by the 30th. Let me think what else. Okay. Forms. So Tar sent out the thing yesterday. I've got a video of them talking through the forms and the changes. I was confused as crap watching it yesterday. So I'm going to watch it again and take notes. And then next Wednesday, I have planned for Jimmy to run this meeting and I'd take a day off. I'm not going to do that. We're going to do the forms video. So next Wednesday morning, please be here by 10 o'clock. I will start the video and it's only 37 minutes long, but I want you to see all the stuff that's coming. There's also a bunch of classes coming. Greater Fort Worth is doing on next Wednesday, the same time that we're doing it at 9 a.m., but theirs goes from 9 to 10:30 in the GF and the Greater Fort Worth Association of Realtors Auditorium, which is there at the main place. July the 9th, they're doing the same thing. Webinar with JC Johnson on July the 3rd at 10 a.m. Just look for your email from your title company. Everybody's doing training. Guys, watch it 3-4 times. Don't think you can get it in one time. I didn't get it in one time. There's a bunch of stuff coming that changed, and we all need to be abreast of it. So we're going to watch it 2 or 3 times from different people. Okay. ABR is still free. Code of Ethics is done. I'm still thinking about doing that Code of Ethics. Somebody talked to me about that, doing something here in the office that we can do a CE and get everybody Code of Ethics. Probably do that in the fall.
It's also free on NAR.
Yeah, it is. Absolutely. But I can't make people go. I can't make Erin go to NAR and do it. So I got to have a class for her because she was that way. I'm just kidding. It was a joke. Still prayers for Phil Vino. He had an episode, suffered a minor stroke on Friday, and he's still, they caught it pretty quick. So he's okay right now, but he still needs a heart. He's still stage 2 on the donor list. The new branded note cards are out. If you're not using those, please do so. Reach out videos are up on the YouTube. And if you're like Taja and need to know where the link is for our YouTube channel, it's at the bottom of every Sunday night email that I send out. It's also usually in the video that I put on Slack every Wednesday as soon as we get done with this class. So, but it's at 6th Ave Homes on YouTube, if you needed to know that. Next week, we're going to do the performance video, and Highland Homes will be here bringing us some breakfast. So, Michael, you ready? Let me introduce you to Michael Lewis. Michael is my personal accountant and financial planner. He has done our taxes for going on 20-something years, and he also does our financial planning. So I put money aside every month, and it goes into an account, and he takes and invests it, and then he gets paid if he makes money. That's pretty much the way it works.
And he's the one that did my LLC. Didn't put name. I'm Holly Allrod.
Okay.
Yes, sorry.
So Holly had asked me for how to do this. He's going to cover some of this stuff, the LLC stuff. Highly listen, really good for this stuff because this is really good information.
There'll be a quiz afterwards.
No quiz. Let me pull up your thing here, Michael, and I
Yeah,
will.
try to keep it simple. Just I don't want to. You can go down a tax rabbit hole.
It won't let me preview it.
Simple taxes?
Yeah,
Oh, really? Okay.
that's my motto. Make the difficult easy.
Let me.
Before
go
you get started, I have a question because at my old brokerage, we had a financial advisor come in. And is it still true that when we receive our commission checks and it's made out to us, we have a separate business account? We can drop those checks made out to us in the business account and not into our personal account. So
Yeah,
that's
that's a big question because it just. I'm sure you can.
If you're a single, it's like it's kind of an LLC.
yeah, I go LLC
If
and,
it's a
and it's the
single member LLC and it's made out to you personally and you're the signer on the account, my understanding is,
Yeah.
I've done it before.
I'm just talking to this. I know.
You can drop it into
I'm sure it
your
happens a lot.
business
But
account.
they just don't put the right payable.
Yeah.
Pay to.
Yeah.
So.
because I don't
Yeah.
want it going into my personal account. I want it going into my business account and then I pay myself out of my business account.
That's the way I do it.
So whoever's paying you.
So the title companies
Yeah.
cut our commission check to us personally. They can't
Right.
make it out like mine's Bush Homes.
So in y'all's area, whenever y'all close on a house, let's say, I mean, is it usually the same time company? But there's many, right? Or it's
No.
not- You kind of, I guess, have to give them a W-9, tell them up front, like, hey, don't pay me in personal, I have an LLC. How do you even communicate?
Now that has to be made out to. us.
That's me personally. That's the way title companies do it.
Really, even after this new,
Yeah, and that's why the way I do it, that's why, because everything I get paid from my real estate, from 6th Avenue, from my title companies, goes into one account. And that one account, he has access to. If I tell him to pull money out, he can pull money out. And then everything goes there, and then I pay myself, my savings, my business, and my kids.
And I thought there was being a change to that.
I haven't seen it.
I haven't.
yeah, so like, I get it, like on the investment side, there's no way they're gonna write a check to the LLC just for liability reasons. And there's reasons for that. But if you, just from an IRS perspective, if you have a separate account that's just business, it's really not a big deal if it's not in the name of the business. I mean, it looks better, it's cleaner.
Right.
It's like I have an LLC, but if, I think you need to explain in the very same forever questions rather than, you just tell them, hey, title company will not write an LLC. You can tell them, try and try, but this is my business account. And all it is just paper trail. At the end of the day, it's like, is your income correct?
Right.
And can you prove your expenses?
Okay.
You know,
All right.
so, yeah. Okay.
Okay.
Well,
There's your presentation.
so yeah, has anyone ever formed an LLC?
Yeah.
Yeah. Okay, it's pretty easy. We can do it. You can do it. Legal Zoom. Either way, state fees 300. It's pretty straightforward. Anybody married? Okay. So for married, the best and easiest and it's simpler is So, well, we back up. Think of it as two different. Well, you've got the state level, and in Texas, it's very simple because there's no state income tax. There's the only thing you have to follow now, which just recently changed. It's called a public information report, and that just says who the members, what's the address. So it's much easier.
For an LLC?
Right.
That,
And on the IRS level, you can elect to be taxed a certain way. There's two options. So if you're married, adding your spouse is amazing because the way that works is you're the general partner, 50-50 community property state. You're the general partner, you run the business, you make all the decisions. The limited partner is just basically think of it like a passive investor. So it's all going to the same place, so it all works out that way. Automatically, that defaults to a partnership. So what that effectively does, just by structuring it that way, you cut your self-employment tax in half.
Mm.
So say you net, we'll just use easy math, you net 100 on the Schedule C where you'll have been reporting, that's 15.3% extra on top of income tax. So when you cut that in half, you're effectively saving yourself $7,500 just by doing that. So married, partnership. If not, you still can do it. There's just extra steps and a little bit extra money because you have to do an S corp. So an S corporation is just like a partnership. Think of the partnership and S corp return like it's just an information return. There's no taxes paid. You just file it and you get a K1, put that on your personal return. It's kind of like when you get your W-2 and you put it on there. You just have your forms that you put in. S corp, you do it the same way. Let's say that same scenario, you net 100, but you pay yourself 50. You're effectively doing the same thing as the partnership. Because the 50,000 after you deduct your wages you paid yourself still flows to the personal return with the K1. So you'd have a W-2 and a K1, still equal 100. But the 50 on the K1 is not subject to self-employment tax.
It's K1.
That's the form you get from the
Okay.
business return.
Okay.
Let's stop there. I'm not going to answer questions before I get too far.
Because you said you can pay yourself a reasonable salary. That was the 50,000. Like you're
Right.
paying yourself 50,000,
Yeah.
and the other 50,000 you didn't pay yourself. So where is all of that extra money? Do you have to save it somewhere?
Well,
I'm just
so
wondering, like, where is it
you
really?
can take it out. Put it
Okay.
put it in your personal.
Okay.
Yeah, it's your money. Because no matter what you take out of the business, you still pay tax on the net income.
Okay.
So that's
No
why.
gross income.
Joanna had a
Well, your
question.
net after your dues and your mileage and
Okay,
all
so
that.
can you run, I'm sorry,
No, sure.
100, right?
Mhm.
So my husband is actually a member of whatever, he's at 50. I'm the signer, primary.
Mhm.
So let's say I make 100, so I claim he's W-2 as well. So I don't know, I get really when it comes to that. So, but just keep it in mind, this LLC, what you were saying 50, so I can draw that, right? And that will be my salary, my cut.
In a partnership, you don't have to pay yourself.
Oh,
That's why I love it the most. That's the
Okay.
easiest.
That's the LLC one at the beginning
Yeah, they're both
with the
LLCs.
husband.
So with the partnership, when you get the EIN number, you tell the system it's a multi-member, it defaults to a partnership.
Got it.
And there's no payroll requirement. You just, do your thing, take the money. S corp, one of the biggest rules is you have to pay yourself something. That's a huge thing. Because in the past, when they first created S corps, people were just reporting all their income, not paying self-employment tax. So they cracked down on that. Haven't seen it a lot. Usually if you do it the first year, you don't do it right. It's not not really a big deal. We just got to kind of work towards what we deem reasonable. IRS would say, okay, same person in your position, what do they make? But as long as you're paying yourself, well, let's back up too. So what if you only net 10? What if you only net 15? Do I have to pay myself? There's some gray area. There's really no concrete guidance on what's reasonable. I just think use your judgment on that, I guess. But if you have a really great year and you think 70 is reasonable, just do that. Well, because what's great there too with the S corp and using payroll, with the partnership, you got to make estimated tax payments. With the W-2, you can actually set your monthly salary to where you can actually withhold enough to cover yourself, which is really helpful. So you end up paying monthly instead of just waiting every quarter.
Joanna said, okay, she said, even if your spouse has a full-time W-2 job. So she's asking, can I have a partnership if my spouse has a W-2 job?
Yeah, because again, limited part.
They're limited
Well,
partners.
even if they have a W-2 job, they could be general partners in an LLC together.
Yeah.
But that would defeat the purpose of doing it because, again, we're just trying to save some money on the Social Security Medicare part. And you don't have to do that. There's reasons for that. We'll talk later. This is more of a.
So many ifs.
Yeah,
Otherwise,
well, because again, it's, you know, if your goal is to maximize retirement savings,
Yes.
kind of just have to pay the full self-employment taxes. That gives you a higher annual contribution limit on your SEP IRA. So it depends on what your goal
All
is,
right.
right? So, and that can, you don't really want to change the percentages too much in the partnership, but keep it 50-50. I won't go
So
over
you're
it.
coming from a sapphire where you're actually putting money away pre-tax or after tax?
Pre-tax.
Pre-tax.
Yeah.
Sapphire.
And it's in y'all's industry, you know, especially with interest rates going through the roof, I'm sure it's down a little bit, correct?
Oh, no.
Well, good, hopefully not. But being self-employed, you know, it's when you're running your own business, it's hard to predict what you're actually going to make, right? So with the steps, and we'll get there down a little bit further, but I usually just tell people wait towards the end of the year when you kind of know what your numbers are. You don't want to over contribute.
Right.
It is better to pay throughout the year, but I just think given the nature of the oil industry, you don't want to over contribute, then have to take it out. And then so I got to pull the earnings out too. And it's a mess. So it's just easier. And with the SEP, I'm probably getting ahead.
You ready to go?
Sure. Why not?
Go down one?
We
Okay.
can always recover everything.
Okay,
It's
so
just a little bit of
our
bullet points.
IRA options with an LLC.
So back to the SEP too, what's great about that is if you file an extension for whatever reason, you have until October 15th of the following year to get the money in the account. So we finished 24,
Yeah.
you getting your stuff together, February, March, you're a tax person, and you're like, look, I want to do a SEP for 10 grand. I don't 10,000 right now. Well, so that's okay. You can just get it into October 15th
Correct.
and it's still counted towards 2024.
Right.
But the regular IRA, that's April 15th is the hard cut. So, yeah, partnership. So again, based on your net self-employment income after expenses is 20% of your net.
So what you're saying, SEP IRA, you have until October of the next year.
With an extension, that's key.
So you have to file for an extension.
You do.
Okay.
Absolutely.
And when do you determine that? I mean, if
Um,
you decide.
Do you think it's taxes done?
Before April 15th.
I see what you're saying. So it's kind of like the same timelines with everything else around.
Yeah. Yeah, I just hopefully everyone's filing extensions if they need to.
Okay.
There's a lot of those and it takes a long time.
All
But
right.
But yeah, just if you know, I'm not gonna, even if you do file an extension and your taxes are done,
Yeah.
you still have to October 15th.
Right.
So if your tax person's like, well, we can do 8,600 this year, it's like, all right, well, go ahead and file it. We have the extension filed.
Right.
File the extension first. Then you go ahead and file the return and pay the IRS. But there's gonna be a deduction on that return that you still have to kind of make whole at October 15th.
Right.
So S Corp, again, a little more steps. Because again, you have the SEP IRA option. Actually, have more options because you can do a SEP IRA and a simple. But a SEP IRA would be based on 25% of what you pay yourself. Because there's really no net. Just so again, S Corps, net income from an S Corp is not subject to self-employment tax. So even if you didn't pay yourself and you made 100, you would just be paying income tax on 100 and crossing your fingers on how they do. So, yeah, 25% of what you pay. So if you pay yourself 50, 25% of 50 would be your SEP max. Another SEP rule is if you did a SEP and you had 5 members, if you put 10,000, you have to do the same percentage for every
member.
owner, regardless. So it works great with a single member S Corp. The simple IRA I like because no matter what you got to pay yourself at least enough to fund it. let's say I think the annual limit's up to like 15, 16,000. I gotta look it up, but let's just call it 15. Much higher limit. The only headache is, let's say we do monthly payroll, gross, FICA, federal folding, and then you got the civil contribution coming out, and your net check would be net of all that, right?
Mhm.
Well, now you got to make that deposit to the investment company. So a little extra step, but again, higher limit. So even if you have a down year and you only make 20, but you want to go ahead and max out that symbol, there's no limit except the annual limit. There's nothing to do with your wages except the fact you have to pay yourself enough to fund it, like a 401k, right? So if you make 20, you want to put 18,000 in your 401k, you got to make at least enough to fulfill the 18, right? Same concept. Hope I'm explaining it right.
Well, that's why we hire you, right?
Well, Brian's taking me out of my comfort zone. I don't usually do this.
I think so. Well, I'm glad you're very uncomfortable.
Oh yeah, bad at public speaking.
This is a cool
You're doing
little,
a great job.
this is a cool little trip.
I love this. This is great.
I don't
So
have any more children under 18.
I don't either. Dang it.
We have
Can I
Gracie.
borrow yours? I'm under 18.
Oh, that's right.
Oh, I already have
We
a
all
dog.
have Gracie. That's
well,
thank
get a
you.
social security number for your dog. So I started this for my two daughters, a 6 and 7-year-old, and they have no idea how good they have it. But parents think they do. So I'm self-employed on the investment side. So I have them come in and just, I don't know, take the trash out, put some files away, whatever, right?
Yeah.
Make them do something, teach them something, right? But
Mine are about, my kids have been working since they were 5 years
there
old.
you go. So this, with your LLC, as long as they're under age 18, that's very key. So in the year they turn 18, you can't do it. So if you pay them $10,000, which that's a lot of money, but just an example,
Mhm.
it is a deduction to your company. And then what's great about this, so the standard deduction is probably gonna go up a little bit, let's just call it 13,000. You can actually pay them up to the standard deduction and still have zero tax liability.
So they can actually earn 13,000? I don't have kids, but
Well,
I think that's
you-
interesting.
Whatever the single, every year, whatever the single standard deduction is, would technically be the limit for taxes.
Right.
But
But
not
that's
have
just,
to pay.
So let's say you're in a 22% bracket, whatever, 24% bracket, you're getting a deduction at 22%, 24%, and they're paying zero on it. And then you can use that W-2, file them a return, and then fund a Roth if you want to. Right.
that's huge.
So let's say you just did 7,000. So the
That's huge.
W-2 for 7,000,
It's triple dipping.
zero tax.
Absolutely.
So you really you could fund the account like, well, this is just their Roth contribution, but they're working. Make them do something. But,
Gives sheltering and
well, what's great about that is, again, so they're not paying tax. Roth is after tax contributions. So they're able to get into a Roth without any tax, or no tax
Yeah.
deferred.
And then.
And I wish I would have ran some numbers and showed you, because I've got a 10-year-old already with 110 in the account. It was in the cover of Time magazine. It's makes me feel like a loser.
How much in an account?
Like 100,
Really?
10 years old.
Wow.
Well, all the speaking fees he gets, they just throw it into an account.
Wow.
But if you run Tom Valley money calculation, if you did 7,000 a year, or let's say you got a 6-year-old for 60 years, just averaging 8%, you've got a pretty good chunk of change.
Right. Compound interest,
I mean,
starting at 6
they're
years
set for
old.
life if they start early. Time is on their side.
Right.
So
Absolutely.
great deduction for you. Great way to fund a Roth if you want to. It's a win-win. What's
Is
great
there
about
any,
Roths?
like liability with the IRS there? Like they're gonna be like, what did your 6-year-old do to deserve $10,000?
It's a good question. Just to make it,
Stuff envelopes.
I mean, yeah, you're right. So, I mean, at the end of the day, I'm not gonna lie. I don't sit there with a ledger and do it, right? It's not time for that. But I can go to Staples real easily with warning, because you get a letter, hey, we're looking at this. Why would they look at that anyway? But if they did,
Yeah.
and chance they did, you can look up your transfer dates in your accounts and just say, okay, this day came in, blah, blah, blah. You can actually create a timesheet that backs up the trail, and which would, prove that. But that's,
Just use a different pen every time you do it.
you
You think I'm kidding?
it would be one thing if you just said you hired them, you didn't put money in. Okay. getting a custodial bank account in the name would be pretty key. If you just kept all the money to yourself and never really did anything trail wise, there was no transactions. Yeah, okay, it looks like you were just saying you did it and you never did it. You're just fishing for deductions, shifting income from one to the other. So yeah, definitely, I would only do this if you're actually going to either fund the Roth or you can still do it without the Roth, obviously.
I mean, it's a provision that if you're using it, they expect certain things.
Yeah, you need to have some record specs.
To attest to whatever.
Yeah, and at that amount, I mean, I'm not sure how. Maybe it's once a month that they come do something, maybe, and that's pretty easy to.
It's your child, they live with you. And
Exactly.
tell them to do
There you
whatever.
But that's kind of, I think those are the most
That's
important
great.
things
I knew that.
to point out. It's just, most of the questions I get are, how does that even work in terms of pass-throughs? What does pass-through mean? All that stuff you'll get used to over time as you do it. But it'll save you some money, and the options for retirement are pretty important long term. So
Any other questions you guys like? We've got about 15 minutes of Michael's time that he agreed to stay here.
Well, I do have a question. So I have,
Here.
401k.
taking pictures of it.
Oh, yeah.
Here,
Keep it on paper.
Thanks.
only one copy.
We can
I
photocopy
can-
it.
Yeah.
So I have my 401k under my LLC as well, and that's my capital right now with my investments. So, I need your business card. So
Me too.
That,
Are you taking
Well, he's
your
gonna
clients?
give us, yeah.
right out the door without him.
Okay, well, I'll share his info.
Well, but are you
Right.
taking new clients?
Yeah.
I am. It's been a while, so I have a lot. It's pretty stacked, but no, from about in the heart of tax season, just give me like a day at least
Are you feeling the heart attack?
to call you back.
Wait.
But this time of the year.
Oh, okay, good. So we can have a consultation with you.
Oh, yeah, absolutely.
Okay, good.
Michael's office is in South Lake. I haven't been to his new office yet. I've been to the old office. I
Oh,
heard.
we can do Zoom.
It's too nice.
That's the way we do that's the way I do my taxes now, is I send him all the documentation that I have, everything, all of my notes, all of every bill that I paid for the year. I send it to him. He goes through it and we do it that way.
Our relationship has suffered because he's stopped coming in.
But he came to see me today.
I have a question though. So do you, I use Hurdler to keep track of my mileage and my,
You're ahead of most. It's good.
okay, so I just send
There's
that.
even Mile IQ. If someone doesn't want to do that, find a way to prove your total miles. That is actually more important, because if I'm in an appeals meeting and I say you drove 40,000 miles and 90% of that's real estate, they're going to go prove 40. They know we can make a mileage log for those 90% of 40. And that's oil change receipts, pictures of odometers, some sort of record.
Oh,
I've been in appeals meetings in Dallas where I just went through the credit card statements, add up all the gas charges. That proved total. And I got the miles per gallon for the vehicle. I printed the state average for the
oh, if
year.
they're not keeping track
Of
of
what-
mileage, so that
Right,
you can.
what
plan
unleaded
that.
gas
Is
costs,
it,
and I
how
backed
much is
into
it
the
now,
miles.
Mike?
65 and a half.
Okay,
I
What
used
was
to
that?
do mine on my phone, like through
Right.
my.
If you
QuickBooks.
you said like something in your,
I
he's
won't
got a
do
great
it,
pic-
that's why I have an app.
if you just wrote it in and put the mileage to and from, fly,
No,
just
no,
threw
no.
it, you know.
Yeah, okay, so.
Everybody's
Hurdler-
different. People are technically
A whole
like the
lot of
stuff,
reports,
you know,
okay.
where people ran a little bit.
I every January 1st, I just I write down the mileage exactly on my calendar every year on January 1st. And then on December 31st, I write
Just
it.
take a picture.
mileage.
That's all I do.
Well, if you
Brian's
buy
mileage is
cars-
based on what he owes.
Pretty much.
What about if you buy-
It's adjustable.
But then wait,
Is it adjustable?
because I have my QuickBooks on my phone
Mhm.
and then it tracks my mileage.
Oh, QuickBooks has one?
Yeah,
We have
it's,
QuickBooks.
yeah,
too.
it uses your location. And so once a week,
Here's my
it
husband.
takes me literally
Yeah.
less than 5 minutes and I click, business,
That's good.
personal.
Good.
And
There's
it's-
even Wave apps, which is free. WAVEAPPS.com. You connect your bank account and it just downloads all the transactions. You just categorize them. That's another one. QuickBooks is good. I mean, they are way more user friendly now. I believe back in the day when I did accounting, they were
I still use Quicken.
Yeah.
The online
whatever
version.
works, because
Yeah.
all that matters is paper trail.
Right.
You know,
Paper trail.
What everybody's comfortable with. Some people use Excel. So we'll just throw our receipts in the bag and summarize at the end of the year, whatever, you know.
Yeah, you should be, like we talked about, if you took 100 Days to Greatness or any of the classes, you should be using a business credit card for all of your business purchases. Every time you buy paper, every time you're buying gas you're going to do drive-bys, pop-bys. All that stuff should be on that credit card and then you don't put anything on that credit card except business expenses. And then you have an exact log of what you spent.
Yeah.
Everything.
Because it's, you know, and like y'all may do, like when you, I don't know if you do staging, you're out of pocket for certain things with the houses, right?
Occasionally.
So keep the receipts for Home Depot and Lowe's if you got to buy certain things, because they love to go, well, that looks personal, we're not allowing it. So just if you have the receipt, it's like, no, doorknob, whatever it is, then it's
This is
pretty,
expense,
yeah,
right?
everything else is pretty easy.
Write it off.
Well, Michael has done a lot of stuff for me through the years, and so I wanted to offer him the opportunity to come in and talk to us. He was willing, and I was like, wow, that's great. I'm glad you're coming because you can explain these things so much better. I will. Kristen said Everlance is a cheat code. Love it. Everlance. I haven't heard of that. Okay. Cheat code. I don't know what that. Kristen, you want to pop on and tell me what that means?
Oh my God. Okay. So Everlance is just like QuickBooks, but it was like how he was explaining it's all in one app. So you can connect your bank account to it, swipe left for personal, swipe right for work. And it also auto tracks your miles as well. And then it also keeps up with like everything that you're earning, everything that's a deduction. And then at the end of the year, you can just export it to your tax advisor, and it like you can export it into like a PDF or a spreadsheet, or like it does so many good things. So
Cool.
I'm sure it's
Thank
the
you.
same with QuickBooks.
Thank you for that, Kristen. Appreciate it. Okay. So anybody else has more Q&A? We still got about 5 minutes of Michael's time. If you would like to ask him another question, if you have anything else. Gracie, you putting stuff away?
Yeah.
Are you putting money away?
Yeah.
Okay. You're young. You get to start early because I didn't start anything with Michael until I was almost 30.
I have another question though, besides, personal investment. Do you, besides Brian, have you dealt with a lot of realtors to where, you maximize whatever it is they're doing on the realtor side of things?
Yeah, I think what's unique to y'all is just your annual dues, all the things you pay, if you take commissions out. Everything else is pretty similar.
As any other business.
Yeah,
Yeah.
it's just all the stuff you out of pocket, like your MLS stuff like that. I mean, it's,
Okay.
Yeah.
All right.
Good. He also does, they do a lot of music stuff too. Do y'all still do music? Does Greg still do a lot of music? That's how we met y'all. That's how I met Greg, was because Pantera was friends of ours. And they said, Greg Thorn does our taxes for all of our music stuff. And so we took all the guys in the band and we all went to Greg Thorn, which is the guy that owns his office. And he did our taxes for about 3 years. And then he said, can you use Michael? And I've been ecstatic with Michael for that many
well,
years.
yeah, I mean, we got to playing, so I'm out of band side. Yeah, I think it just takes understanding the questions to ask.
Mhm.
Right. It's like, okay, if the musician comes to you, it's like, well, I know you buy, so you got to buy
Strings and guitars and amps
there's
and
cables,
yeah.
there's everything, there's tubes, but it's just understanding the industry that you're working with, and that's common. What should be. It's just asking the right questions. Usually it's just, I just tell people, summarize your income and expenses and we can go from there, right? We can just move forward.
So as far as, is it possible to refile a tax year if you pay, because, my husband and I he's been doing our taxes and we pay extra on top of what we already paid. Is there a way to do research and figure out where we, even to reclaim and say, well, we don't really owe you anymore? Or, does that make sense?
If you're going back, which is 3 years, 3 year
Yeah.
statute of limitations.
Yeah.
If you're going back and adding expenses, I just advise people, make sure that you've got
Proof.
the perfect documentation. It's,
Because once it's processed, like you're liable to be.
well, I hate discouraging people from ever doing that because I don't want people overpaying or being afraid to deduct what they're supposed to. They're afraid of red flags, right? No, just keep good records and don't be afraid of the IRS. If you're always doing the right thing,
Right.
nothing to worry about.
Okay. But it's more like, did we make mistakes and stuff? Did we miss anything? Or,
If you made a mistake, don't go backwards. Yeah. Depends on how big the mistake is, I guess. I should advise you. But if we're talking, I mean, it's like, okay, oops, I wrote off that computer and I did it the previous year. I mean, it's immaterial really in the scheme of things. But normally I don't advise people to go backwards and offer it up. Just correct moving forward, unless it's really egregious. Maybe just you can't sleep at night. You might want to pay your taxes.
I bought a hay baler and it cost $100,000.
You found out it was only 50.
Yeah. Yeah, that's a bad one.
If you guesstimated 80 and it ended up being 60, okay, sure.
We have a question from an IRS standpoint. I don't remember when this happened, but many years ago, we needed to pay more money than we had in our pocket. I don't know why. I think we messed up on our claims. This is before I was ever a realtor. So we were both W-2 employees. We messed up on claiming. So we owed the IRS money. So, maybe it was whenever my husband took out all of his money out of his retirement job. Something dumb happened, right? So I owed them money. I got on this stupid payment plan. But I started finding Facebook tries to tell me, hey, this person will help you. So I talked to the CPA somewhere else in the world, somewhere else in the US, and they said, well, we can cancel all of your previous IRS debt if it's more than, and I can't remember how many years. So I've been paying with interest every year per month, like it's withdrawing out of my checking account every year for, I don't know, 10 years. And my amount I owe them doesn't go down much because they're basically there. You know what I'm talking about? I'm in that situation. Is it true that I can cancel that after so many years? Because it never goes down. And if not, I can just pay them. I just forget about it because it just keeps getting withdrawn on my account. $150 a month, and it's been doing it for 10 years.
I don't do debt resolution, but from my experience, when I've kind of dabbled a little bit, just to help some clients out, it's pretty difficult, especially if you're making money. They're not just gonna like, well, okay, you have to really be in a bad situation.
So
I'll fire you and then you can tell them that you have a job.
Get fired, don't work for 5 years.
I was just paying more out of it. I can, I just forget about it. But when I talked to this one CPA person, they said if it's anything past so many years, it's automatically, you just file one piece of paper.
Yeah, they have 10 years to collect.
And then after that, it just goes away, which I've paid the IRS more than what I owe, FYI, because I paid them $125 a month for 10 years.
Rates are up now.
Yeah.
Right.
So right now, it's about 1% a month with penalties and interest. So if you pay 10 grand, you can't pay it, it's going to keep accruing no matter what. So it's always on the outstanding balance.
Right. So it's not like I haven't paid them. It's just I've been paying them plus all of these fees all these years, and they're not going down.
You shield a line. I would just get with someone who's special. There's offices that's all they do.
Yeah. Okay, so that really is a thing because I just didn't know if they were telling me that. I don't want to go with someone that.
I'd be skeptical if they're already telling you they can do it because they're just trying to get you in the door. Most people.
Right.
I don't want to say.
Because they're making money off of
Yeah.
you.
Because you're paying a fee.
Well, yeah, you'll have to pay them to do it.
Be weary, be skeptical, healthy amount of skepticism, so that someone's promised you in the world before they've even talked to the IRS.
Yeah.
Because it's not an easy thing to get.
Yeah.
If you're making 200 grand a year, you owe 50, you're like, I can't pay it. So, they're not, they're not some shit. Let it go.
Yeah. Okay.
You can, because it's all income based, and there's, they're going to look at your monthly cash flow and determine your payment plan at some point. And usually, if it's 50,000 or lower, they don't file a lien. You can do just divided by 72 and pay it. Anything above and beyond that, it gets a little more complicated.
Yeah, mine was like literally, I don't know, 6,000 one year and 7,000 the next. Like it was $13,000, and it's been going on for more than 2 years.
Oh wow!
I've been paying. So, and I just don't think about it because I'll pay attention, and then I'm like, okay, I need to do something with this. So, okay, cool. Well, that's all stuff I'll deal with on my own, but I do still want to get your information from Ryan and see if I can contact you.
I will give Michael stuff in the Slack thread later today.
If you want, whatever's easier, but you could also shoot me a list of emails and I could just kind of do a group like, hey, here's my contact info and address of them, the signature, and then we're pretty available all the time, except when I'm meetings all day. But yeah, we don't charge for advice or anything like that. Maybe we should. Just if you have a question, just call.
Okay,
You didn't have to use me as a client or as a guy.
Just mention me. Just mention me.
I'm Brian.
I'm Brian's guy. Okay, so thank you guys for being here today. Michael, thank you very much for all the information. I will share that with everybody. Quick note, I will be out of town incommunicado the 30th, which is next Friday, 29th in the afternoon through July the 9th. Jimmy will be here through the 5th. So there'll only be a couple of days that you'll need to be sure and use subject matter experts and Slack for everything. I will be checking Slack occasionally, but I'm going to be on a beach with a big glass of tequila in my hand. So I love you guys so much, but
Trust you that day.
huh?
We can't trust you that day.
That day you may not get a good answer. But that'll be next Friday through the Tuesday, a week, like 10 days.
Where are you going?
We're going to Mexico. We're going to Mexico for Caracol, between Caracol and Puerto Morelos.
Just put it in your suitcase, 'cause I don't get a vacation this year.
I'm sorry. Well, hey, thank you guys for joining us online. Appreciate you. Love you very much. I want to go ahead and stop the meeting now, and I'll put this video up later today if I can find it.
I will tell him. I think it's gonna be just 3 days in
What about it?
Mexico.
Okay, give me just a second. I'll turn this thing
I
off.
like that long extended